Alright, so in this lecture, I am going to be talking to you about how to backtest like a pro. So I'm going to do backtesting right in front of you and show you exactly how you're supposed to backtest. What are the things you should keep in mind? What are the do's and the don'ts when you backtest, and how do you actually start? Because trust me, backtesting is the most boring thing you will ever freaking do. But it's important and it makes you money. So I guess you have to do it, right? So let's get to the charts. So first of all, when you're doing backtesting, there are two important things that needs to be right in front of you, whether it's written down on a piece of paper or whether it's on a different window on your computer. So the first thing you need is your trading system, so that every time you look at the trade, every time you look at a trade appearing in front of you on the charts, you can always read it and verify it whether it fits your system or not. See guys, I'll tell you something very important. Backtesting, and this is something that nobody talks about. In backtesting also, your trading psychology is extremely important. In fact, if you cannot have a proper trading psychology in backtesting, you will never have a proper trading psychology in the real life market, right? And what do I mean by trading psychology in backtesting? I mean that a lot of people, when they're doing backtesting, they lie to themselves, because eventually, even in backtesting, what people do is they take trades that are out of their system, that doesn't fit into the rules of their system, and in fact, just to feel good that, you know, if they see that a trade is doing well, if they see that the trade is going in their favor, they would just write that down into a piece of paper, and in fact, they would make a set of incorrect data. Now, if you're going to make a set of incorrect data, it is going to give you incorrect results. It's going to damage you. So the number one and the most important rule of backtesting is be honest to yourself, and always have these two things right in front of you, which is your trading system and your backtesting template, which I have given you, which I have shared with you. So when you're backtesting, how do you start, and how do you exactly go about it? So I have the TradingView premium version. You might not be able to do it on TradingView, but there are multiple free platforms that you can use. I will research about them, and I've never used a free platform for backtesting, so I'll research about them and I'll put the link below so that you can backtest for free. However, I would really suggest that if you're really serious about your trading journey, that I think spending a few $100s on your trading software is not going to be a big deal. In fact, it should not be a big deal, because if you're treating this as a business, this is just your costings, this is just your expenses, right? And that should be taken very, very seriously. So how do you go about it? So I'm going to start backtesting from the 1st of January. So how do you backtest? So like I said, you need to have your trading system right in front of you. You read that and you backtest accordingly. So I'm going to backtest the same trading system that I gave you in phase number 2. So now you know what my trading system is, right? So I'm going to go to, so this is 29th of December. I'm going to play this, and here we go. We are at, all right, I moved too fast. All right, so that's 6 a.m. This lecture might be a little long, but stick with me. I'm just going to show you 2-3 trades. I'm just going to backtest 2-3 trades and show you. You'll get a fair idea of how exactly you're supposed to do it. So there we go. That's 9:30 a.m. That's 10 a.m. right? So 10 a.m. is exactly when I trade. So I'm going to do this. All right. So now this is the perfect chart. This is the perfect morning chart that I'm looking for. So what I'm going to do is I'm going to go to the 4-hour time frame. Let's go to the 1-hour time frame. I'm going to develop a bias. So now, if I, let's say, go to the daily time frame or in the higher time frame, I can clearly see that there's an uptrend, right? The price is moving in an uptrend. There's a structure of higher high and higher lows. So my bias should clearly be bullish in this example. So let me just draw some support and resistance level. So this is a zone on the 1-hour time frame. Let me go to the 30-minute time frame. Yes, that's a support region. I can see that the price was taking resistance here, which it has now broken above, which is also very interesting. On the 15-minute time frame, I can see that the price has broken above this resistance, and now it's forming some structure right here. And on the 15-minute, I can call this a resistance as well. So this is something that is interesting. So let's say if the price breaks above this level, so now it's time to draw the execution zone. So I can clearly see that there's the price broke this particular level, but it is struggling to go up. But the fact that the price is going above, it has formed such a bullish structure. If you look at this, so if you remember something I told you, that if a price is trying to break a zone multiple times, that could potentially be called as an A plus setup, right? So you can see the price has tried to break the zone multiple times. So now I just need to wait for this break of structure. Once this breaks, this is my execution zone, I can enter, right? So what I'm going to do is I'm going to draw an execution zone right here. So once this zone breaks, I will immediately enter. Okay. So let's see. There we go. So here I will be, let's say, so normally as per my system, I would take an impulse entry over here. An impulse entry is an entry right at the break, right after it breaks right above at this particular level. But obviously for beginners, I don't suggest that. I suggest that you enter only at a candle confirmation. So let's say you enter over here at this particular candle confirmation. Your stop loss would be below the previous 15-minute candle, just right here. Now let's say if this stop loss seems too big, right? This, according to this particular target, the stop loss seems too big. So what I'm going to do is I'm going to keep a stop loss right below this 5-minute candle. So that still gives me a risk reward ratio of 1:1.8. And let's see how the trade goes. All right, so the trade is pretty slow. All right, so the trade decided to hit a freaking TP right in the other candle. So now this is what happened, right? So now what I'm going to do is first of all, I'm going to look at my trading system. Trust me guys, you need to do this for at least first 10-20 trades that you backtest, and once you do that, you will develop a next level of discipline where you will never have to do this ever again. So just trust me on this and just follow what I'm telling you, okay? So once you've got your first trade, once you've backtested and you've got your first trade, don't be happy. No, you haven't figured it out yet. You need to do this hundreds of times. Just be patient, okay? Keep patience. So you go and read your trading system. Did you follow each and everything that is written over here? Okay. Find support and resistance levels on gold with the top down approach. I did that. Develop a bias. I did that. Draw zones on 1 hour 30 minutes. I did that. Execution zone. I did that. Trade only pre-London. Was this trade executed on pre-London? So this was 9 a.m. Dubai time, which is not pre-London. So what I'm going to do is delete. Doesn't count. This trade doesn't count. Even though I feel extremely happy, even though I feel, oh my god, I got a 1.8 RR and this trade hit my freaking TP in just 50 minutes, doesn't count because this doesn't fit in your system. And why do you have to be so strict about this? Because my friend, if you're going to consider trades in your backtesting data which actually don't fit into your system, you will never be able to come out with a pure set of data. Okay, so you need to be very strict with this and control on your psychology. Stay disciplined. Okay, so I'm not going to count this because the pre-London starts at 10 a.m. Dubai time. So now, once again, this is also resistance. So if this resistance breaks, yes, there is an entry that I can make because the price is almost about to break and the next rejection level that I see is this level. So maybe I can take this trade, right? So let's see. Now in this case, the price has not tried to break this zone multiple times. So I would like to wait for a 5-minute to 15-minute candle confirmation. Let's see what happens. All right, so price is correcting, price is coming down. All right, so here we go. We've got our, I think we've got a 15-minute candle close as well. I've got a 15-minute candle close. Let's say I go long here. Okay, let's say I go long here. My stop loss, let's say, is somewhere over here. Ideally, in this example, I would keep my stop loss here. This is where my stop loss would be, below this candle. I don't mind keeping it below this candle as well, but this candle is perfect according to me. Now let's keep the target at the next rejection level. So this is a perfect 1:2 trade, right? Let's see what happens. There we go. There we go. Took out a stop loss, right? Again, even though if it's a stop loss, what are we going to do? Find support and resistance levels on gold top down approach, develop a bias. I did do that. All of that. I did do that. Trade pre-London. I did do that. Execute trades on break of structure on 5-minute candle or 15-minute candle. I did do that. Target the next price rejection level. I did do that. Trail SL, it never went in my favor. SL above or, let me just edit this. SL above or previous 15-minute candle if price permits. Above or below. Let me just edit it quickly. Yeah, so stop loss above or below previous 15-minute candle. Okay, so did I do that? No, I did not. My stop loss should have been this level. Now, if I did that, then the trade would not have given me a 1:2 risk to reward ratio. So what I did here is I forced myself to keep a shorter stop loss so that I could get a higher risk to reward ratio. But eventually what happened? I lost the trade. So actually, if I was just disciplined to the system, I would not have taken this trade and I would not have made this loss. Do you understand what I'm trying to tell you? I made this mistake purposely so you can understand how to backtest properly. Okay, so you need to have your system written down always in front of you when you're backtesting, because that will keep you in check and that will keep reminding you, my friend, that brother, this trade, brother or sister, whatever you are, this trade is part of your system or not. Okay, so I'm going to discard this trade out because I did not follow this. And there goes the pre-London session, and I'm not going to be trading this, okay? Because according to my system, the session is over, pre-London session is over, so I am not going to be trading for the rest of the day, and I'm going to be calling this a day. So let's wait for the next day, which is the 3rd of January, and see. So I like to delete all my zones and start off fresh. Okay, so let's go to the daily time frame. All right, so we are on the daily time frame and we can see that the price is correcting. Price is on the lower high and lower low structure on the shorter time frame. However, on the higher time frame, it is on the, so this is a daily support that I can spot. But if this breaks, this would this would form a head and shoulder pattern on the 4-hour time frame, and that would mean that gold is interested in going down. So let's see. Let's fast forward this to the next morning. I hope all this is making sense to you. If it's not, you need to watch all the lectures again. And if none of this entire course had made sense to you, you need to go and watch 0 to Alpha 1.0, the first version of 0 to Alpha, all over, and then come to this version, because this is a little bit advanced. All right. Just waiting for the morning. There we go, 9 a.m. All right, so we've got 1 hour to trade. So let me draw my execution zones. So I can see that there is a, let me go to the 30-minute time frame. I can see that there's a rejection zone here. I can see that there's a rejection over here. I can see that, let's go to the 15-minute time frame. I can also see that there's a resistance over here. And price could potentially break down this because there's a small support forming and the bias can be considered as bearish. So I would like to draw a small support over here. If this support breaks down, I will go short. I don't want to go long in this scenario because price is correcting on the higher time frame. So my bias for today is bearish. Okay, so I formed my bias with the basis of the higher time frame analysis. So what I would like to do is I would like to short in this scenario. Let's see what happens. Okay, price is coming down. It's not 10 a.m. yet. Beautiful, beautiful. Okay, so this is a lovely structure. Okay, price has formed this structure again and again. It has tried to break this support region again and again. So if the zone breaks, that's going to be a A+ setup as per my system. Okay, so let's see if it actually breaks or not. Beautiful, beautiful. So let's see if it's a 15-minute close. Okay, so in this scenario, I would even enter, because like I said, this is an A+ setup. I would enter directly. Let's say you enter over here with a stop loss above this green candle, above this red huge candle. Okay, your target will be the next rejection zone. So let's go to 30-minute. This is the last rejection level from where the price rejected towards the upside. So this would be your target, which is a beautiful 1:2 risk reward ratio. Let's see what happens. Oof. All right. So, what do you think? What is the first thing that you will do? The first thing you should do is go and read all of this again. Now, there's only one rule that could have possibly be broken on this one. I want you to take 5 seconds and think which rule could that be. 1, 2, 3, 4, 4.5. 5. If your answer is rule number 7, you are correct. That is the only rule here which could have been broken because I followed everything else properly. So let's see. So my stop loss here was 20 pips, right? 20 pips was my stop loss. So that means 20 pips is 1:1 RR. The trade did not go in 1:1 RR. So basically what I'm trying to say is that in a real life scenario, if this trade would have gone in my favor, I would have achieved 1:1 risk to reward. I should have trailed my stop loss to break even, right? And if I would have trailed my stop loss to break even and it would have come to break even, I would have gotten out of this trade with no profit and no loss. But did that happen? No, it did not happen because the price did never achieved 1:1 risk to reward ratio. It actually went up before achieving 1:1 risk to reward ratio and then came down and took my stop loss. Sorry, took my take profit. So is this a valid trade? Absolutely. So I am going to go finally to my backtesting data and I'm going to add this over there. Okay, so my entry was at 11 a.m. 3rd of January. So I'm going to write here 3rd of January 2024. The direction was short. I went short. My entry was 2062.456. Just two decimals are fine. My stop loss was 2064.46. My exit was 2058.22. 2058.22. My returns, it was a win. The returns were somewhere around 4.22% because it was a 2.11 RR trade. So the returns would be 4.22%. Notes. Now this depends totally on you. Now if I was in your situation, I would just ask myself. Now this is where the tricky part comes in. This is where again you have to really trust yourself and you have to be very honest to yourself. Now I'm going to ask you this question, okay? And you have to answer honestly. If this trade went in your favor a little bit like it did over here and then went up and almost took out your stop loss, would you still hold it till the TP or would you panic and get out? And if the answer is you would panic and get out, write down in the notes, learn to hold trades. Stick to your, okay, fuck. Oh shit. Learn to hold trades, stick to your stop losses, be disciplined. So you know that in a real life scenario, you would be shitting your pants if the price came back to your break-even level and almost took your stop loss. But in the reality, in the backtesting world, you are celebrating because you hit your take profits. This is not something to celebrate. This is something to work upon. So, but the best part, my friend, is that if you do this 100 times, guess what? You will truly develop confidence to hold trades in the live markets because you know that if I just stay disciplined to my stop loss, the market might just reward me. But imagine you did this without any backtesting data, without seeing that this could also happen. You would be shitting your pants again and without even realizing what is the solution. And this is why backtesting is so important. This is how you backtest, right? So again, I'm going to repeat. What you have to do is you have to be extremely honest to yourself. When you're backtesting, you need to have a system. The moment you find a trade, you think you found a trade. After you found that trade, after you marked all the entries and all of that, you need to go back, you need to see. Okay, you need to read your system again and check if it fits every single rule. If it does, perfect, go here and make an entry. But still, there might be some notes that you want to make, that might be some real life scenario. So after you're done, you need to ask yourself that if I was actually in this trade, in the live market, what would I do? What would be my thoughts? How would I be thinking? So that you know that what you're supposed to work on, right? So my friend, this is how you backtest like a professional trader. You need to be extremely honest to yourself. You need to be extremely disciplined to your system, to your rules, and then only you will be able to come up with a good amount of data. And when you come up with that backtesting data, then trust me, you are going to have so much knowledge about your own system and so much knowledge about yourself, because you will ask yourself after every trade that what would I do actually in this particular trade if I was in the real markets? So that by the end of 100 trades, can you just imagine how much data would you have about your system and about yourself? You will know exactly where you're messing up. You will know exactly where you're getting fucked. You know exactly where your thoughts are being disaligned. You know exactly what major mistakes you're doing. And you basically know what to work on. But the problem is most of the traders is they don't know what the hell they should work on because they're just confused. So backtesting is going to give you a very good picture. But for that good picture, you need to be extremely honest to yourself and follow the exact method that I have taught you. I will see you in the next lecture.